Knowledge is power. Make an impact by learning more, or hire us to do it for you. Let us focus on what we do best so you can stay focused on what you do best. Find all of our options under services, one-to-one training, subscription-based training, or accounting and business consulting. It was a CD. Who does CDs? It's funny, I was working with a client yesterday who had...
That CD has worked the entire time, all the way from...
It's lost in his toolbox somewhere.
You know what?
Windows 2000
You know what?
to Windows 10.
What?
I would look for it if I were you. Can I come over and look for it?
Yeah. Oh, no, that's long gone. You know what? What happened was Intuit started selling comparable CDs for half the money. No, I'm just kidding. Anyway, good morning. We're live. Happy Friday. It's February 15th, 2019. Happy belated Valentine's Day. Glad you're all with us. We're officially live on Facebook. I'm going to share this into our illustrious Between Wall and Main Facebook group. Looks like Kevin Lacey just joined us live on the Facebook feed. Let's go share, because sharing is caring. Share in a group between.
Or any way you want to.
Yep, feel free to share it on your feeds. Tell the whole world that we're live and we're talking about really, really exciting accounting stuff, going from compliance to advisory.
It sounds like an oxymoron, accounting and exciting.
I know. I had we interviewed Ron Baker for the Authentic Accountant podcast this week, so that'll go live probably in the next month or so.
Awesome. And can't wait.
It was a really good conversation, and he kind of reminded me of this because, of course, the conversation was primarily about value pricing, and especially about the conversation that you have with the prospect when you're trying to assess what the value is and, really what's going on with them. And it was, he said some really interesting things, which I'll wait for the podcast, of course, to come out so that you can hear it from him. But one of the things that I kind of took away from the interview, which I don't mind sharing right now, is that, you think in terms of you have this client and they're telling you about what's going on, all their problems, why they're coming to you, why they're leaving their former accountant or CPA or whatever. And, it comes down to this. You want to offer them, 3 options, right? And so it occurred to me, and the word compliance is what made me think of this specifically, that like in the next conversation I have with one of these prospects, I think what I'm going to do, because we get into all this minutia of pricing tables and what line items are on the pricing table and what do we offer at these levels. And the way he laid it out, and again, you'll hear it better from him in the interview, but it was like, it's much simpler than that. And, he gave an example of how he was unhappy years ago with one of his landscapers. And so he started interviewing new landscapers, and, the one he ended up hiring in their conversation had asked him, what's going on? Why don't you like your old landscaper? And he said, because I travel a lot, I don't have time, but when I come home, I find all these things wrong that I feel like they should have taken care of. It's like, I don't want to have to come back from being busy and paying attention now because now I have time and find things wrong that they should have taken care of. And so the way this guy sort of sold him on it and why he hired the guy was the guy said, look, I'll give you what is it? He said, I'll give you best curb appeal on the block for this price, right? I'll keep you up with the block for this price and something else for the lowest price, right? And so what do you think he bought? He said, I want the best curb appeal on the block, and he was willing to pay the extra money to get it. And I thought of like our version of that, or at least one way to put it would be that I could say to a prospect something like, I'll put you in compliance for this price. I'll do well-reviewed financials for this price and bulletproof for this price. Boom, choose your plan. Right? Real simple. Anyway, so that's what this word compliance sort of makes me think about. And it's a great way to lay it out, I think, in terms of what we do, right? Do you want me to just keep you in compliance? Fine. We'll charge you the minimum amount. We'll keep you in compliance. We'll download code reconcile. Most of that can, in fact, should be automated by now, right? Especially if you are meticulous about creating your rules and using whatever apps you can use to have things set up so they're coded by the time they get to the bank feed, That's the way it should be done anyway. So that, that brings us up to today's subject, which is getting from that compliance level of service to the advisory level. We keep hearing that's what you need to do, but I've frankly heard very little of how to do it, what to do in order to do it. What does it actually look like when I'm doing it? I think it looks something like this. So,
But Seth, I want to take a step back a second and say this is why I ask why at the beginning of my journey with my new client. Why, what do you want? And let them be involved and let them pick.
yeah.
And then you go from there.
Yeah, our job is to take the cotton out of our ears, put it in our mouth, and listen to them tell us what they need, right? All too often, because we think we're subject matter experts, we don't let them talk. We talk over them and tell them what we think they need, and before they know it, they've been sort of steamrolled into something that they don't even understand what they got and why and how it's benefiting them because they didn't get the chance to tell us what they need. I'm not saying you guys do that, but I know a lot of people do. You know, I know you guys are all amazing, like stupendous. So, going from compliance to advisory, I think means a number of things. Let me just bring up my notes here because I did actually make some. I was preparing. Matthew's my witness. I was literally burning the midnight oil last night, writing content. The last part of which was this. I'm speaking at Scaling New Heights for the first time ever this year. I'm going to be in Salt Lake City with the rest of you fine people. Giving 3 different sessions on G Suite, different angles. You know, one is going to be, of course, learning how to use it and all the apps and everything that goes with G Suite. Another is going to be about the consulting opportunity, speaking of going from compliance to advisory, where you can help your clients get set up with I don't even want to call it an app. It's a suite like G Suite and get their businesses running and functioning on a platform like that so that you can get them running more efficiently and more effectively and completely in the cloud. That's another way to go from compliance to advisory is start doing these kinds of services for your client. And the point in the big picture is you've done a lot of this already for your own firm, right? One of the ways I built out a lot of the services that I offer today is I did it for my own company and I liked what it did for me. And so I said, you know what, if I did it for me and I learned how to do it, I can do it for someone else. Even if it's not directly tied into accounting and bookkeeping, who cares if I enjoy doing it and somebody's willing to pay me for it and I have the expertise? That's the very definition of being an entrepreneur to me, is doing something I absolutely love to do and getting paid for it. And then you never work a day in your life. So, you know, again, we keep hearing about how badly we need to move from compliance to advisory services. Everyone's telling us what to do, but they're not telling us how to do it, right? And that's frustrating. You know, then they want you to attend 16 webinars and sign up for 4 different services to learn how to do it. And it's ridiculous because it's not that hard. And I think most of the people who are here with us, especially in this group, you know, probably already know a lot of this, but there's a lot of other people out there who are newer, less experienced, who don't understand this stuff the way that we do. And, you know, so today, this subject, and we're going to talk specifically, I'm swallowing my words again, about CashFlowTool.com. And I'll get into why I'm choosing this in particular, you know, among the myriad of other tools we could be looking at in this, you know, sort of vein. I'll get into that a little later on, but this today is me giving you one really powerful example of how to do it, along with a way to build a nice stream of revenue with multiple layers to it. And so just bear with me as I go through this stuff today. And as always, you know me, most of you know me, I think. I can talk for a single hour in a single breath. So just stop me, interrupt me if you have questions, if I've gone too fast, if you want me to go back over something. I promise you I will not be offended. I will just secretly have Matthew Fulton make a video making fun of you later. Kidding. So, you know, and the bottom line is this, and so I joked about it a few minutes ago, but in all seriousness, if Intuit is going to offer bookkeeping services for $250 a month or less, it's because this download code and reconcile process can and should be automated. As an automated service, it's low value, right? It doesn't add a lot of value. So it shouldn't be thought of as competition. It should be thought of as the writing on the wall that's telling us that we need to start looking at things differently, right? And we had a very, very detailed, and in some places it almost seemed it's hard to read into text that people have written on Twitter, but I got the impression some of it was even a bit heated. And then, of course, you have the people who just want to put on a show and get attention, and that's another story for another day. But the bottom line is there's been a lot of conversation already online about this new service. Intuit is testing. They're not actually doing it. They're testing it. They're hiring people. They're going to see how it goes. But the bottom line is it shouldn't be seen as a threat. It should be seen as the writing on the wall. This is the reality of the direction we're headed in. And that level of service is already substantially automated, already can and should be. It's time to get out of that and get into something more sophisticated, frankly, more interesting, because what they can't do, I don't think, at that price point, they can't replace the relationship, right? Our role, our job is to build and maintain and nurture that relationship with the client. Matthew.
I would like to ask everybody here, out of the last 5 clients that you brought on, how many of those 5 required some kind of app connection or some kind of custom integration connection of some sort? For me, it's 5 out of 5.
Oh yeah, everybody needs something.
100%.
So
Pretty much 5 out of 5 for me too.
Mhm.
there you go. They're not doing that part. So you're safe.
Mine's actually 7 out of 5.
You got a bigger app stack.
He has a client with more than one database. Yeah.
All right, so bottom line, the writing isn't just the writing isn't just on the wall. It's all over the freaking thing, right?
Yeah, but Seth, there's also the thing about this automation does not really work the way that it says. In a perfect world, you would be able to connect it and then just read the reports, period.
All I can tell you is,
Break and things,
yeah, but it's getting
and
better and better.
somebody needs to clean that up.
But it's getting
Somebody
better and
needs
better.
to know how to clean that up.
But it's getting better and better. And what I can tell you, Gina, is go take a look at an app called bookkeeper, because they are kind of at the forefront of this. And they started it building it for themselves and substantially automating the download code reconcile process. And now they're offering it as an app to help do it for others, right? And if you
I don't know. I just came off of a broken bank sync.
I'm not saying it doesn't happen. I'm saying it's getting a lot better. And I
agree. But I'm
believe
still
it's-
trying to catch up because I'm still working on the broken stuff.
Mm-hmm. But it's also a question of finding the right apps that don't break, right? I have spent hours and hours in the trenches with lots of apps and dismissed the ones that break in exchange for the ones that don't. Or, as I pointed out at QuickBooks Connect this year, I just developed my own process because we have the import tools. And when I'm importing stuff, I'm working on a cleanup job right now that 5 years ago would have taken me 30 hours to do. I've gotten it done in less than 5, right? Because in their particular case, we're going back in time. So bank feeds are only going to go back 90 days or whatever. So I've had to rely on what I could download from their bank in a CSV file. And if I was doing it for desktop, I absolutely would have used Matthew's Vendor Sync, because Matthew's Vendor Sync is going to help you code that stuff and prepare it and import it in a fraction of the time. That's why I keep bugging him about getting it ready for QBO. But the bottom line is, because I have the Excel skills, I was able to build Excel files based on those CSV downloads, add in columns for the QuickBooks payee in the account, right? Work on that with the client, and in a couple of hours or whatever, I send it to the client, he fills in what I couldn't on my own, and then with SASANT Excel transactions in 2 seconds, I've got the entire year's worth of banking and credit cards imported, right?
You gotta take a breath for a second, because Matt and Tiffany are having too much fun here.
Yeah, what are you guys doing? Tiffany's in outer space today.
They are playing with their Zoom
Grabbing
green.
the green off. Sorry.
Oh, we're having background wars? Is that what it is? Oy.
Sorry.
All right, so there's probably more than this, but I've identified 2 ways you can go with this, with these advisory services, right? One is you can move up to a CFO or advisory service consulting model. So instead of doing accounting and bookkeeping, and this is really the difference in how I think we need to think about this, instead of doing, so when you're at the next networking event and somebody says, what do? Don't you dare say, I do accounting and bookkeeping. What you say is, I help companies build wealth, right? Because that really becomes our role. In my interview with Ron Baker, he described somebody, he didn't mention the person's name, but I know there's many people out there like this person who started out as an accountant, and now he gets a minimum fee of $10,000 to work with companies, consult with them, and help them build wealth. Because this guy has taken the idea of advisory services to the extreme, right? So we're no longer accountants and bookkeepers. We're helping companies build wealth Find a clever way to word that so that you stand out, so that you don't get stuck in that box that people put you in the minute you tell them, oh, I'm an accountant. Please don't ever tell somebody you're an accountant. That's like the kiss of death, right? You're immediately going to get branded, and not in a good way. Now, the other way you can go, which I've already alluded to, is you can take the very same apps and processes that you have and continue to learn to automate on your own workflows and start doing that for your clients, right? Start helping your clients. I had a client reach out to me very specifically. He said, I want your CFO services. I know you know how to automate the crap out of things, and I want you to work with me and my bookkeeper to do that. And I've begun to do that. And it's not even all about automating. Some of it's even simpler, where I worked with this bookkeeper on developing a simple system. If any of you have taken my courses on nerdenterprises.com, then you know it's called Remarkable Reports. And I kind of showed this bookkeeper that system that I teach in that course. It's just a simple system that makes it really easy for her to go to the owner and say, here are the bills we need to pay. And it gives them a little tool that you can create in 5 minutes in Excel after exporting 2 reports from QuickBooks, where they can go and say, well, if we pay these bills, here's what's left in the bank. And they can go tweak it until they're happy with what they're paying and what's going to be left in the bank after they pay everything. You know, that's a simple thing. But I mean, when she was blown away when I showed her this, and there's nothing too complicated. I had to teach her in Excel, and she was not an Excel whiz by any stretch. I asked her, I always preface it, how good are you with Excel? And she's like, well, if you ask me to write any formulas, I'm lost. Well, I taught her how to write simple formulas, because there's nothing more complicated than simple math, addition and subtraction. We didn't even have to do multiplication or division, right? So easy. But today we're going to focus on the first option, right? Going the route of the CFO or advisor role. And this means we go from essentially compiling financial statements, which is what traditional accounting and bookkeeping services really did, to analyzing the data, right? When you think about it, traditional CPA firms had 3 basic services they would offer typically, right? They would offer compilation, review, and audit. And then, of course, tax, which was usually a whole different department, right? Compilation was the lowest level of assurance, almost no assurance, but they would put a P&L together and put their name, their stamp on it, saying we compiled it. But then there's qualifying language saying that there's limited, if any, assurance about the accuracy of the numbers, because they're just relying on what the company's management gave them, right? Then there's a review level engagement, which is limited assurance, and then there's the audit level engagement, which is, I think, is reasonable assurance about the accuracy, right? Where are my CPAs in here? Who's going to call me out if I say something wrong? So those are the 3 levels of traditional services that, as an accounting profession, we've offered. But the beauty of going the route of the CFO advisor role is you don't need to be a CPA, because you're not going to do certified audits. You're not going to do reviews or compilations even, because if anything, that sans the actual certification from a CPA, that is sort of at the bottom level compared to where we're trying to go with what we're going to do for clients. We want to add major value. We want to stop with the compliance stuff and stop with the compilation work and start moving into analyzing that data and using that analysis, sharing it with the client and saying, here's what we can do to help you. And the first thing I've chosen, because I think it's the absolute lowest hanging fruit that we can and should be looking at here when we're going this route, is improving cash flow. How can I improve your cash flow, right? Now, if you have been paying attention to the blog on nerdenterprises.com, then for a number of weeks there, and I still have more to go, every Tuesday I've been putting out another blog post and video specifically about cash flow, right? And with what I've covered in the blog so far, and if you want the links, just ask me. I'll provide you with the links. If you don't ask me, I'll assume you don't care, and I won't provide the links. But if you want the links, I'll send them to you. But what I'll tell you about it at a high level that I've gone over and given you detailed examples and done videos to get even deeper with it is that there are 3 levers we can pull to help improve a client's cash flow. Can anybody tell me what those 3 levers are? Before you do, think about it. I need to get a quick refill on my coffee. I'll be back in less than 60 seconds after this brief word from absolutely none of our sponsors.
Hello, this is Matthew Fulton with VendorSync, being a sponsor for this show. No? It's worth a try. Any guesses, anybody? 3 levers? Tiffany.
Are there any CFOs in this group?
Tiffany looks like she froze. No, there you are. You are moving.
Actually, does anybody do outsourced CFO services here?
I don't know if you guys can hear me. I was asking, is anybody in this group a CFO already?
I mean, we do CFO level services, but I don't really call myself a CFO.
Okay, who's got the answer? 3 levers. What are they?
So before we jump into that, Seth, I'm asking a question. So,
Okay.
So one of the questions is, one of
By the way,
questions
who's that? Is that you, Mike Floyd?
Yeah. Hey, what's up, buddy? Good to see you, by the way. So the firm that I work with, I'm a provisional CFO. I come from a CFO background. I was a CFO in my corporate life. Now I work as a provisional CFO, and I do CFO outsourced services. So the question that's interesting and that I want to hear from this group is the conversion from doing typical accounting stuff to what a CFO's responsibility in the organization is. I'm interested to find out what this group thinks that is, because that role, as a senior executive in a company that's helping steer a ship of a company, there's a lot of nuances that exist in the CFO level, not just the debits and the credits and that kind of stuff. There's a whole lot of other things that exist there. So I was just curious, who in this group is already a CFO? Who
Well,
already
me for sure, but I'm going to shut up and let others talk before I do.
So I want to say, do we even know what what the difference is here in this group anyway? Do we know what the difference is? Because how many are really doing CFO level stuff and not knowing it?
That's a good question.
That's primarily my question.
So years ago, I did a video actually on the difference between a CFO and a controller and a bookkeeper. I threw that in there just to kind of, I think most people understand the difference between a bookkeeper and either the other two. But what was the difference between a CFO and a controller? Of course, we all know what CFO stands for, right? Let's start there. Chief Financial Officer, right? Mm-hmm. So in the accounting line of any big business, right, you have, hi, Bob. I just accepted Bob's friend request in the middle of the webinar. In the line of the accounting segment of any business, the CFO is the top boss, right? Kind of works underneath the CEO and alongside the COO and maybe the CMO, right? All these O's. It's like Cheerios. So you have the CFO at the top of the food chain in the finance part of it. Below that, you have the controller, right? Then you have the accounting staff, right? Maybe some accounting managers, whatever. That's the hierarchy on an org chart, okay? But what does a CFO actually do? I'll give you my simple version of the answer. And then, of course, Mike, I want to hear yours, obviously, because you definitely have the experience. But in my experience, the CFO's role, the controller is the one who's going to be sort of supervising and looking over the work of that accounting staff and still really doing that compilation and compliance stuff. The CFO, in my experience, is usually the one who's charged with the responsibilities of sort of laying out the yardsticks, looking into the future, and then, of course, comparing that with what's going on today and seeing, are we hitting our targets? Are we reaching are we meeting our expectations with respect to earnings, right? In a big, especially a public corporation, we're looking at earnings per share, right? And we're looking at really in the big picture, are we doing the right thing by our shareholders? Because let's face it, that's what big publicly traded companies care about more than anything else, right? So the CFO is doing that high-level analysis, doing the financial modeling, right? Looking down the road at where we want to be, but analyzing the heck out of the finances as of today to see how do we get from today to where we want to be tomorrow, which really comes down to bringing it down to our level, so to speak, which is not big publicly traded corporations. The way I see it is we want to be looking at ratio analysis and other kinds of analysis that give us insights into, and like I said, I'm starting today with one particular part of it, which is how can we improve cash flow? Mike?
So from my perspective, there's really 5 things. There's 5 areas that most CFOs will look at. They're going to look at, and you're exactly right. The controller level is going to be handling most of the day-to-day, making sure that the policies are being executed the way that they were designed, make sure that we're staying in compliance internally with what procedures or SOPs are in place. The chief financial officer, anybody in the C-suite, right? So anybody that's got a C part of their initials of their name are going to be on the visionary side, right? So they're going to be setting strategy this long term. I don't look what's happening from month to month or even from year to year. I'm looking what's 2, 3, 4, 5, 10 years out. And the things that they should be focused on are like performance management, growth strategies, process optimization, risk management, human capital. We got the right people in the right place. Those are the elements that affect the organization as a whole. And if you break those down, so these would be at a larger level. I've been in organizations where annual revenue is in the $50 to $100 million range. So they're not considered, they're medium-sized to larger companies, a couple thousand employees. But the elements that exist with that trickle down to even a small business. If a small business understands what the elements are, they can still effectuate the same things using tools and technologies that are out there. In our firm, we focus on people, process, and what was the third one, Bob? I can't remember. People, process, and technology.
Technology.
Technology is the last one. So each one of these elements is, if you're looking at them properly, you're not looking at them day to day. So when you step into a conversation with somebody in a networking event and you say, I provide CFO services, you better be ready to talk about those 5 elements and how they affect a business, not how to keep your books in place and make sure that the debits and the credits equal and the balance sheet's where it needs to be and what a common ratio is and what a current ratio is and what a DSO stands for. Because you would expect that they would already, if they don't know that already, then they've got some other issues that are a little further down the chain. But when we in our company are stepping into environment, we're making sure that the company's cash flow is where it needs to be, but also looking to plan for the future. Are we doing transactions that are going to be leading to an M&A? Are we doing FP&A analysis, financial planning and analysis? Are we looking at other companies to buy? Are we looking to double down with our marketing team to make sure we're providing the right budget? These are the kind of elements that are sit above the level of the actual accounting work that I'm interested in hearing what this group actually does.
Anybody?
I said a mouthful. Sorry about that.
That's all right.
Wow.
That's right. It was a good mouthful. It was a very good mouthful.
I probably should turn my camera on too.
There you go.
Mike,
Looking good.
can you review those 5 elements again?
Yeah, I wrote it down. Who's taking notes? Who's our scribe for the meeting?
Well, you were saying people, process, and technology, and looking at the cash flows and looking to the future far out.
Mm-hmm.
Yeah.
Not just next month to make sure that they can make payroll.
Right. So, in fact, since you brought that up, Katrina, here's what happened in my own experience with my company and in my own journey is when I first started or set out to start what became Nerd Enterprises, I was working at a CPA firm full time, and I was petrified that if I went out there, I wasn't going to be able to bring in enough money to pay the rent, right? Because I was still living in an apartment in those days. That was before I bought a home. Now I have to worry about paying a mortgage. Geez. So I was petrified I couldn't pay the rent if I didn't bring in enough business. And so what I did, I didn't know it at the time, but what I did was I built a little financial model. And I said, well, here's how many clients I think I can get. You know, and first I looked at my personal finances and I added everything up and I said, here's what I need to bring in every month to make sure I can pay the rent, the insurance, and everything else I need to pay. You know, here's my monthly nut. And in order to get that monthly nut, if I'm charging, in these days I was charging by the hour. So if I'm charging, you know, this amount per hour, I need to bill this many hours to generate enough cash every month. How does that get divided up amongst the clients I'm going to get? How many clients can I get? And I built out this little financial model that did that calculation and then rolled that out month over month, because then there are some months that things come up that don't come up every month, you know, that I needed to take into account. So I needed to do it for like at least a year out. And I think I ended up doing it for a good 2 years out. Traditionally, we do a 5-year projection, right? But I did this. And then I started the business because I saw it. I saw the writing literally on a spreadsheet. And I said, I can do this. I was confident. And so I started building it on the side. And once I had enough, I gave notice at the CPA firm. As it worked out, I had enough. I was deep enough into a project with them that they still retained me as a consultant part-time to sort of finish out that project. And then little by little phased out of being employed and into the world of the entrepreneur. And then I kept revisiting that financial model I did. And I kept building it out more and adding things to it and adding more schedules to it. And then there came a day when I said, holy crap, I should be doing this for clients. And what inspired that was one day my wife said to me, you know, because at this point now I'm building a bookkeeping service and companies are coming in and usually they have a mess, right? Almost every client I've ever gotten, even to this day, started out with a cleanup job, right? Started out coming in and they had a mess that I needed to clean up. And then I cleaned it up and then they became just a regular client where now we're just doing that compliance work, just keeping it up, right? And I said, I can do, my wife said to me one day, she's like, how do these companies come in with such a mess on their hands? Like, don't they do what you did? And I'm like, no, because they're not accountants. They don't know how to do what I did. They don't even, it doesn't even occur to them. It's not even a thought on their radar to do what I did because they make widgets or whatever it is that they do. They sell real estate or they, you know, whatever it is, it's not accounting. And so they don't even know that such a thing exists, right? So I started going to clients, and this goes back, Mike, I think to your question that you brought up earlier about how do you kind of make that transition, right? How do I talk to the current client and say, hey, I have this other thing I think I should do for you? And it pretty much goes exactly as I just said. I'll be on the phone with a client. Maybe we're reviewing their books. Maybe we're just going over their P&L and balance sheet, making sure everything looks good. And during that conversation, what I'll usually do, if it doesn't come in somehow naturally, if the client doesn't say something suggesting that they're looking for something more, something else, something deeper, what I'll often say is something like, hey, you know what? If you want to take things to the next level, here's what I can start to do for you. And then I'll go in and lay out the process of building out what I've always been calling cash flow projections. And that's simple semantics, right? If I start talking about a financial model, they get overwhelmed and scared and they think that's way over my head. That's Harvard MBA stuff. But if I just call it a cash flow projection, they can relate to that language. And all of a sudden they say, yes, I need that. I would love that. How much does it cost? Now we're talking. Now we're getting from compliance to advisory just in that one conversation, right? And then I give them a fee to build it. Not cheap, by the way. Do not dare go in and tell somebody you're going to do something like this for $500, right? Bare minimum to build something like this should be $1,500. I don't care who they are, in my opinion, right? And of course, that depends on the size of the company, which is going to drive the complexity of it. $1,500 for small, simple business, right, Mike? If you're doing it for a $100 million company, you're talking 10, 15 grand in fees probably just to build this thing, right?
Yeah, so financial models are a weird animal, right? It depends on what the end result is. We build dashboards that have ranged from a couple grand to 50 grand. It depends on how complex it is. But I got to be honest that a larger company is probably doing data mining through business intelligence software already. So building a model out, typically whatever SAP they're using or whatever ERP they're using,
it's already there.
That element in there. So
yeah,
where the benefit is in the smaller side companies, so smaller size companies that have QuickBooks or something similar to QuickBooks and don't have the level of detail from QuickBooks to marry with their sales data. Typically, that's the two that we combine.
Right.
So that your sales data with your cost of goods sold, it filters into whatever you're doing inside of your accounting package. But depending on the complexity, again. A small company, any company can benefit on a very simple a business model. And one of the things we build we call it a I don't even know what we call it, but it's like a clarity document, which is basically a P&L that ties in elements of what a strategy looking forward would be. And we use Excel to do it, and it's very, very simple. But from our standpoint, we always look at how do we help the client? How do we help give them financial clarity? Because financial clarity is what they need.
Right.
And so we focus on, as a firm, we focus on making sure that the clients are eliminating or reducing their risk exposure by not having the information in front of them. And
right.
So our key point is the fact that you need to have the information in front of you. You can't just pull it out of QuickBooks and know exactly what you're. I mean, there's good information there, but put it into context. And the example that I love to use is if I told you that it was 50 degrees and that's the only information you had, you have no idea how to qualify what that is. But if I told you that it was 50, that it's January 1st and it's Antarctica, now you've got some information to use, right? So you know that 50 degrees is weird. That shouldn't be like that in Antarctica on January the 1st. It should be way, way colder than 50 degrees. So putting that in context, in our case, we use industry benchmark standards for what certain ratios should be. But quite frankly, we focus on cash. Cash is king. So small businesses, cash is where it's at. So do they care what their current ratio or liquidity ratio or all that other BS is? A lot of times they're making a widget. They care about the widget, and they also care about how much money is in their bank because they want to go buy a bank. They want to go buy a boat, or they want to school, or they want to send a kid to college. That's the kind of stuff they're thinking about. So
I'm really, really glad you brought that up, Mike, because it underscores one of the very important points I wanted to make this morning, which is because you're absolutely right. Most clients, some might actually be familiar with ratios. Most don't care, don't understand what they mean, but it's more about what you can do with the information once you have it. So we as the accountant have to interpret and analyze the data and then come up with the strategy and present that strategy to the client. Right? So we have to look at the current ratio today versus the current ratio yesterday and see, are we losing liquidity? If we're losing liquidity, that could indicate a problem. So we don't go to the client and say, hey, I've been looking at your current ratio. We go to the client and say, hey, it looks like cash flow is tightening. It looks like we're getting squeezed on cash flow here, and here's what I think we need to do about it. And earlier I brought up the question, what are the 3 levers we can pull to improve cash flow? Anybody have an answer for that? Because now I'm ready to give it to you, because then I got to get into the rest. We're actually almost running up out of time here. Anyone?
Hey, Gina, you're not muted.
Sorry, I'm typing away.
Oh.
No problem.
So 3
Alyssa
levers.
answered in the chat.
What?
Alyssa answered in the chat.
I didn't see it. All I see is the last thing I see is Bob's. I didn't see.
Speed up AR and slow down AP.
There's 3 though. So the one you're missing is inventory turnover, right? So we have accounts receivable turnover, inventory turnover, and then we have accounts payable turnover. And by the way, if you're not an inventory-based business, if you're a service-based business, then your labor force is effectively replacing your inventory, right? Because your labor force is what you're turning over to generate the revenue that your business generates, right? Especially the part of your labor force that's directly involved in the production of income, like an accounting firm that has its accountants that do the accounting work. So those are the 3 levers we can pull. And so the bottom line is I want to focus on cash flow first because it's probably the most obvious and easiest place to start, as we've just already been talking about. But and this is important because Mike mentioned dashboards, right? And we have a lot of apps out there. And the truth is, even as I talk about doing cash flow projections, I know not all of you have the Excel skills necessarily to know how to write all the formulas and build all the schedules. A lot of you may have the basics, but I realize that not everybody has the level of skill with respect to spreadsheets that I've got, frankly. So I know that not all of you can do what I can do. I can teach you how to do it. But as Mike pointed out, there's less and less of a need even to do that. There's apps that are going to do a lot of that work for us. One of them being the one I'm going to show you in a couple of minutes, which is being built out more and more to a level where it's not quite there yet, but you're going to be able to build assumptions into it and say, once I hit this revenue threshold, assume I have to hire another employee at this rate. How's that going to impact my cash flow? Things like that are going to get built into this tool. I've had conversations with them specifically around this. But we have to stop thinking that we can just throw a dashboard at a client and think that this is advisory services, because that's not. That's more like, F you, go read this and leave me alone. Okay? That's not advisory. That's not strategic. That's not providing any guidance. That's trying to get out of it, right? And say that you're doing it. So to do this effectively, we have to charge higher fees and we have to have fewer clients, right? And we have to take time out to review things together with the client, which means using Zoom like we're using right now, logging in with the client, and either have them share their screen, or if you're showing them the tool, you share your screen. And like I said, like Mike and I just discussed, you've already done the analysis by the time you get on with the client. So you don't have to talk to the client about current ratios. You just have to show the client the information they need, help them to understand what the concerns are, and then lay out the yardsticks and say, here's what we need to do about it. Here's how we're going to get from where we are today to where we want to be tomorrow. And here's how we're going to help build wealth for your firm. Mike mentioned about whether there's an M&A strategy involved, right? Meaning, do we want somebody to come and buy our company? And if that's the strategy, and I think even if it isn't, the goal should still be building that equity section of the balance sheet. I want to blow up the value of the company. I want to build wealth for the company, which means I need equity to go up, which means I need liabilities to be reduced relative to assets, right? And in 97 and up, a couple of times we've gone through a series of lessons that we did where we analyzed, just buying an asset isn't going to improve your balance sheet, right? Because you're either using up another asset in the form of cash or you're taking on a liability in order to acquire that asset. So your balance sheet doesn't change when you first buy an asset, right? In fact, right after buying that asset, it's going to get worse because you're going to depreciate that asset, which means the value of your assets goes down, right? So when you think about this bigger picture, when I buy an asset for a company, that asset's purpose is to generate revenue. And the amount of revenue, the ROA, the return on asset that asset produces, has to exceed my depreciation plus any interest cost associated with any debt I took on to acquire that asset and some other things. So to me, that's the stuff a CFO does, is do that analysis. Should we buy this asset? Should we lease it? Those kinds of things. What's going to be better for the bottom line and for cash flow? So again, to do this kind of service effectively, we need to charge higher fees and have fewer clients, and because we need to take the time out. We need to be able to make the time to work with the client and do this for them. And then the whole point is for you to give the clients suggestions, for example, how to improve cash flow, right? And then you follow up the call with good and highly organized and detailed notes, right? And I want to show you a very specific example because it's a recent one, because this is kind of what your response from the client might look like when you send them that follow-up email. This just happened, as you'll see from the date stamp last week. I'm going to share my screen. I had just such a meeting with a client, went over a bunch of things, and then after we got off the call, which was on Zoom, I outlined a bunch of notes, very detailed bullet points with all kinds of sub-bullets and very clear cut. Here's what you're going to do. Here's what I'm going to do. And this is what I got back from him. He says, I said, thanks for the call. He said, thank you for the recap. Much better than my chicken scratch, right? That was his kind of lighthearted way of telling me this was really helpful and useful, right? And it also showed him that I was paying attention, that I wasn't just, doing the bare minimum. I was engaged. I was involved, right? And I helped him figure out what he needed to do next. And he sent me, still more follow-ups. This is the same company that I described earlier that I worked with as bookkeeper on developing a simple process for them to be able to review their bills and decide what to pay and manage their cash flow better, right? Which brings us really to the next thing that I wanted to talk about today, which is CashFlowTool.com. Okay, because CashFlowTool.com is, to me, it's quickly evolving into, if it's not already, one of the best tools out there for looking at this stuff. And so now you don't really need to know how to calculate the ratios, and you don't need to, what do you call it? You don't need to know all the sophisticated Excel stuff. These guys kind of give you what you need so that you just have to do the analysis, maybe do the write-up, and then get on the call with the client and review it. And I'm going to show you one quick example, and then we can poke around some of the other areas. I want to show you what I meant when I said this is becoming a great forecasting tool on top of analyzing what's going on currently. So I'm just going to find our example company here, which is Rick's Bike Store. And so this connects directly, for those of you who aren't familiar with this connects directly with QuickBooks Online or QuickBooks Desktop. It works on both. I don't think it works in Canada yet. Sorry, Tiffany, but I believe it's on their radar to make that happen soon.
This thing is beautiful.
And I want to give you one quick example. So again, it summarizes this in the form of these cards, which means it's putting it into a layout that clients can understand very easily, right? Very simple. And they give you the explanations. Average cash gap days, 125 days. Okay, but what does that really mean? The number of days for money to come in after bills are paid. That's important. That means when I pay a bill today, it takes 125 days for cash to come back in. Now, usually when we're looking at something like this, we're thinking of it in terms of something like inventory, or as I said, in a service-based business, it might be that the payroll I pay today, the revenue produced by that payroll doesn't come in for another 125 days, right? If you're doing the math, that's 4 months it takes to turn over my cash. That's a long time. Okay, one thing that really stuck out to me was when we see something like this. Side by side, I've got my AR turnover and my AP turnover, two of the primary cash flow levers, right? And look what's happening here. And it's funny, the last time I looked at this, the numbers were very different, but it still kind of tells the same story, that it's taking 85 days on average to collect a receivable, and we're paying our payables within 25 days, right? That's bad. And I wouldn't know this. I wouldn't necessarily see this. Even if I ran their balance sheet, the balance sheet doesn't tell me this. The balance sheet just tells me how much there is in receivables and how much there is in payables. But when I look at this and when it's laid out this way and I have the explanations right here, I can log in with the client and I can say, hey, client, here's what this tells me. We need to start looking at the clients who aren't paying us quickly and getting on the phone with them. And of course, not slamming them, but having a conversation with them in which we ask for their help. Right? Because when you ask somebody for help, they're receptive. When you go off on somebody and say, when are you going to pay me? They're not receptive, right? So this is a job for a salesperson, right? Not for a compliance person, for a salesperson. A salesperson is the one who should make these calls because they know how to speak to a client in a way that's going to keep them open and receptive if they're a good salesman or woman, right? So we need to come up with strategies for improving this. We want to get this down to 30 days if possible, and this we can probably stretch out another 5 days a month if we need to, right? It's even worse. The example I looked at recently, this was like 19 days, accounts payable turnover, right? So this is very actionable, strategic information I can review with a client today and start immediately improving their cash flow by giving them this insight and then laying out the strategy for how we're going to improve this. In other words, I don't just say, okay, here's your problem, good luck, right? I say, no, here's what we need to do. Here's how we can improve accounts receivable turnover. We got to get on the phone with the clients. So the question, though, is which clients do I call, right? Well, I believe there's a card for that here. Let's go to all cards. Because that's what I mean. This tool will help you take it to whatever level you need to. And it does take a minute to refresh because it's pinging QuickBooks Online.
Can this tool be white labeled?
I think they're heading in that direction. I don't think it's there yet. Here are the top 5 overdue customer invoices. So here's who we need to call, right? These are the top 5 customers who are behind on paying us, or the top 5 invoices. In this case, it's mostly all one customer. It could be that if we call this one customer and get them to catch up, all of it, boom, we just got a nice little infusion of cash that we've needed, right? But the bigger picture conversation needs to be around, hey, we really need your help, guys. You know, we're working hard for you. We're doing the best job we can. And you might even want to go into that call prepared with some data about how you've performed for them, right? That's how I would guide my client. If you call that customer of yours and say, hey, look, here's what we've done for you in the last couple of months. I just wanted to go over this real quick. So you make that conversation more about, here's what we're doing for you. Here's how we're helping you. And then it's, oh, and by the way, would you mind seeing what you can do to help us get our receivables from you collected a little faster? It would really help us out, right? So you don't even make the call about the collections. You make the call about what can we do for you? What can we do to help you? And then the collections piece is an aside to that, which again is why I say it should be the salesperson or somebody like that who makes those calls, not a compliance officer, right? So this tool, by the way, you can also, when you set it up with a customer, you can share it, right? And then you can talk about it. So I can go in here, I can drill in here.
It doesn't really drill.
And I may be locked out of this because it's a sample company, but normally you can click on this guy and almost have an almost Facebook-like thread and discussion around it. Right? There's also, Mike's got little videos throughout. There's Mike. Love this guy, which you can play, which he kind of explains things in this. Yeah, it's clear that the comments are locked. But what about forecasting, right? How do we now take this to the CFO, to the real CFO level? Well, that's where our cash flow calendar comes in. First of all, the cash flow calendar is color-coded to let us know when and where we might be getting into trouble. Okay, and we can define what those thresholds look like. So if we go here to settings, I can say heat map, right? So it shows us, this is configured to show as red when it's $10,000 or less, right? And again, I can't edit this because it's a sample company, but you could go in here in the full version and change this to any amount you want. Because if you set it to 0, it's probably too late by the time that map turns red. So you set your prudent reserve, your threshold, and say, I need you to warn me when cash is getting below whatever it is, maybe 6 months worth of expenses, however you decide to define what a prudent reserve is. Okay. Over here, you can choose which cash accounts should be included in the analysis. For example, I probably don't want trust accounts included because that's not my money, right? Initially, it's just going to pull in every bank account it sees, a trust account being among them, but I can turn that off. Okay, now what's more is, not now. So here's starting cash 65. That's if I've updated the financials, that's going to be agree to the balance sheet as of today, which of course means your books need to be up to date. That should be a given, right? And now here it's analyzing and guessing at what cash comes in. This isn't like the traditional QuickBooks budget where it just looks at what your receivables and payables are and says, okay, well, there's an invoice with a due date that's tomorrow, so we're going to collect this money tomorrow. It's much more sophisticated than that. They have algorithms that actually look into this and determine based on patterns and habits what money is likely to come in, okay? And I can add stuff into this. So I can edit this, again, in the real one, and I can add things in. I can take things out. I can click on one of these guys, right? And they have these sliders, but I can go in and change or remove these amounts, and I can add amounts to these, okay? And I can do the same thing with cash out, right? So I can literally build a projection into this, and then if I want to, I can dump that into Excel in a click. So I can really analyze that and go through it with a client, right? So this takes the data that's in your QBO company. It has algorithms that have, predictive analytics built in. So it has, and it's uncanny, the accuracy. When this first came out, and it's gotten a lot more sophisticated since, I actually did a test. I built a cash flow map out of my own data. And the idea is if no sales come in, how long is my money going to last, okay? And in my business model, I know exactly what that looks like because almost every single piece of revenue of mine comes in on a subscription, right? My clients pay set monthly fees. I have subscription training programs. So I know exactly what's going to come in and when every single month. And I know exactly when I pay my expenses every single month. So I created this very detailed cash flow map, even made a video on it because why not? I just took the time to build it. Why not make a video? And so I used that to calculate when I was going to run out of money. And then I compared that with CashFlowTool. It was within 4 days of me. And they didn't have the intelligence I had to know. Theirs was based on predictive analytics. And it was within 4 days when it said I was going to run out of money. I was blown away by that. We also have a section here for alerts and notifications. Again, it lets us know the other side of the coin, which vendors are we overdue with. We didn't pay our bookkeepers. That's not good. And then we have documents, and the new plans that they have different levels, and different levels, of course, include different amounts of storage. But this way you can attach documents. So if you've run a balance sheet and you've reviewed it with a client, you can attach that. And as I said earlier, they have the space built in. This is just to download it. But they have the space built in on these dashboards and you can customize the dashboard. So you can say, my cash flow. Right? And then once I've customized this dashboard, I can add the cards that I want. They're over here on the left. Just about every one of them, I think, has, some kind of an explanation. A lot of them videos with Mike, explaining to you. So let's say average cash needed to close the cash. Done. Let's add that one in. It might take a minute to show up. And again, I may be limited here because it's a sample company.
Did you see that it had it had the formula of how each one of those are calculated?
It explains it to you in more layperson's terms. I don't know that it gives you the actual formula, but it's more in lay terms because, again, we're dealing with our clients on this. And like Mike said earlier, clients don't care how the current ratio is calculated. They just want to know if you're talking about it, what does it mean for them, right?
I mean, you could Google the ratios. They're very simple.
Lots of information. Yep, exactly. The difference between current and quick usually is just inventory is not included in the quick ratio because it's not considered as liquid as the other current assets. Yeah. So, and the original tool that these guys still have out there, Finagrash, does give you the calculations and the explanations for what's a good trend, what's a bad trend, and all that. I think they're eventually going to roll that technology right up into this.
So if I could add, Seth, and I know we're over time here. I don't know how everybody's schedule is, but I gotta bounce off in just in like a minute. But one thing that you guys can do if you use this tool is go to like NAISC and get the SIC code. use the zip code to go find what benchmarks are, and then use that for context to tell people. So let's say, for instance, you're in a bicycle shop that has an AR. Surprises me, by the way. That just surprises me. But
I think they're populating it with information to make sure that they can give you a
right,
clear idea. But yeah.
Also, a bicycle shop that's got a couple $100,000 in annual sales is pretty surprising too. But be that as it may, you take the SIT code, go find what benchmarks are, use that to put into context, and add that value to your customer. Because if you tell them that your DSO is 85 days, but the
What's
industry
a DSO for somebody who doesn't know?
Does everybody know what DSO, date sales are outstanding? That's how long it takes you to convert your AR.
Mm-hmm.
If DSO for the industry is 105, right? That's just what it is. And you're at 85, you're doing better than the industry average. So we use that to put it in context, like I talked about earlier.
Yeah.
And that adds additional value for when you're on there. Seth, I got to run, man. I appreciate you inviting me to the call, though. Thanks a lot.
Yeah, thanks, Mike. I appreciate you joining and providing your insights. That was great.
If anybody needs anything from me, I'm around on Facebook and other places. Y'all guys find me.
Yep, just ask me. I can introduce you to Mike. And I'm also obviously going to provide you all with my my link for CashFlowTool.com. So they give me credit for sending you there. So please, if you haven't, take a free trial of this. I think you're going to find it's worth it. But like any tool, you have to use it. Take care, Mike. And I'll send the link out in the follow-up email, and I'll also post it right on the thread where the live feed is today, so that you guys can all try it out if you haven't already, and just make sure. And if you happen to sign up and forget the link, just use the code NERD, and that will let them know that I've sent you there. I'm not sure if it gets you a discount or not. I know at one time we talked about doing that too, but either way, make sure they know I sent you. It'll help me. And that is about all I have. So hopefully you all got something out of this today, learned something, enjoyed it. And hopefully now you can all start thinking a little bit more, or maybe a lot bit more, about how to get out of compliance and get into advisory and make some real money without having to work so hard. Because that's the truth of it. You'll work a lot less hard and you'll make a lot more money doing these kinds of services. Anybody, any questions, concerns, comments, feedback before we go? Nope.
Great show today. Thanks.
Thanks, everybody. Don't forget to join Gina's Hangout later on, 2:30 Pacific, 5:30 Eastern, somewhere in the middle. Go to SBAA on Facebook, and you'll get the information there. Gina will let you in.
All righty. Bye, everyone.
Bye.